All right, cool. So Rina, how you doing?
Good, and you?
Pretty good, pretty good. Just kind of tired.
Same.
Yeah, you do anything interesting this weekend?
No, I just work.
Oh, I feel it.
Yeah.
All right, cool, cool. You excited to get to the next part of this lesson or
Yes,
presentation or
sir.
whatever?
Mhm.
All right, let's go. So last week I believe we ended at around the sectors. We left off at sectors, and I think I ran out of slides, but I've been working on some, so.
Okay.
Um, I guess we'll just go ahead and just go through real quick what we learned last week. So we learned the intro to the stock market, what the stock market was, um, different types of markets. We went over stocks and ETFs, and sectors. Sectors isn't here, but we went over that. So now what we're going to be covering today is what is fundamental analysis, what is technical analysis. This is backwards. We have choosing the broker, the account types, PDT rule, and then terminology. And then once we get rid of all this boring stuff, basically important but boring stuff, then we'll be moving on to the advanced, and that'll probably be if we don't get time to do any of this advanced stuff today, then I'm pretty sure by the next lesson we're gonna get to the charting. So, well, after
Okay.
psychology and risk management, then we get to the charting. Um, I know you really want to learn the charting like quick, but it's very important to learn everything else before, or else you're just gonna be like lost.
Mhm.
So I guess we'll go ahead and start with what is fundamental analysis. That's the next slide after sectors. Right here we go. Here, give me a minute. Alrighty, fundamental analysis. Let's go. Oh, gotta skip through all this. Let's get there. You still able to see my slides, correct?
Yeah.
All right, cool. All right, make sure you have a notebook out with you, a pen, screenshot any of this, and don't be afraid to stop me if I'm moving too fast. And don't be afraid to ask me any questions as well.
Okay.
Just stop me. Um, so, fundamental analysis. What is fundamental analysis? Can you guess?
Not really.
Not really. We went over this. We went over this.
I know, but I forgot.
So obviously, it's the
Is this
opposite of
like,
technical. Go ahead.
yeah.
So yeah, the opposite of technical analysis. It's instead of using charts to base your trade decisions, you're using basically
Like research,
like
right? Like
research. Yeah,
articles
like
and stuff.
income statements, earnings reports, profit and loss statements, anything that makes a company, um, appealing. Basically,
Mhm.
you don't want to invest money into a company that's always losing money or that's never profitable. So people look into the fundamentals of companies to decide whether they want to invest in that company or not. So let's go on to the textbook definition. What is fundamental analysis? So fundamental analysis is the analysis of a business's financial statements, health, and competitors and markets. It also considers the overall state of the economy and factors including interest rates, production, earnings, employment, GDP, housing, manufacturing, and management. So a lot of boring shit, really. Shit that I don't even like to look at, or I don't even look at this, because I'm a technical trader. But it's just
Mhm.
good to know this stuff. So we go here. Fundamental analysis considers external factors that could influence a stock's price, such as macroeconomic events like wars, the state of the national economy, international trade, industry trends, and any other data or circumstances that could affect the stock's perceived value. So Basically, fundamental analyst or whatever. They look into all that to see if it's gonna be worth buying that company. You know, they look more for long term, like that long term outlook of the company. So right here, they look at things like income statements, balance sheets, cash flow statements, management, um, all that shit, you know, all that important shit, I guess, for companies. Um, and here we go, technical analysis. This is my favorite stuff. This is the stuff that I know like the back of my hand. So technical analysis. Um, what is technical analysis? As you can see right here in this picture, we're looking at these little bars with Q3 and a magnifying glass. So you look at shit like that. I guess, I don't know. For fundamental analysis, technical analysis, this guy has a magnifying glass of the chart. That's what I do. So here we go. Technical analysis is the means of examining and predicting price movements in the financial markets based off an asset's chart history. It is one of the two major schools of market analysis, with the other being fundamental analysis. Unlike fundamental analysis, technical analysis is based purely on the price charts of an asset. Identifications of patterns on a chart are used to predict future movements. So, as you probably noticed, looking at my charts or whatever, things I post in the Discord server, you'll probably see me post a bunch of like patterns, triangles, or whatever the case is. That's basically what I'm doing. I'm using technical analysis to predict price movement or future price movement for the short term though. Um, there we go. Technical analysis is based only on stock price or volume data. The objective is not to predict the future, but to identify the most likely scenarios. Price action is used as an indication of how market participants have acted in the past and how they may act in the future. So I remember you asking me, and I don't think I ever answered your question, but you had to ask me what price action was, or you wanted to learn price action.
Oh yeah. Mm-hmm.
So price action is basically, and now that I get to answer your question, price action is basically just the movement of the price. So um, price action would be like the most barest form of technical analysis because everything you see on the charts is basically price action. I wouldn't know how else to explain it, but you're just watching the price, how it moves, how it rejects a certain levels or areas, um, how it reacts to certain levels. Um, so that's basically what price action is. Price action is used to as an indication of how market participants have acted in the past and how they may act in the future. So I don't know if you're familiar with like everything in the chart, like it gets deep. It gets really deep, like the whole psychology of everything in the chart. Everything that's the reason why support and resistance work is has to do with a lot with psychology because everybody's buying and selling at the same areas. So we basically use price on the charts. We look at the history and we're able to see these points where people were selling and buying at. That's how we know where to buy and sell basically. If that makes any sense. It gets deep. It gets really deep. Um, but here we go. Technical analysts use chart patterns and trends, support and resistance levels, and price and volume behavior to identify trading opportunities with positive expectancy. Technical analysis does not consider the underlying business or the economics that affect the value of a company. So, like I said, I don't give a crap about fundamental analysis. I mean, it's important to know. Um, it's good if you're holding shares for long term. Um, but as far as option trading, especially if you're scalping or day trading like how I do, then it's really not gonna affect you
Okay.
unless you're swinging out a couple weeks, swinging a contract out a couple weeks or a couple months, or playing leaps. But just scalping, simple day trading, you don't really care about the technicals. I mean, you care about the technicals, you don't care about the fundamentals. There you go.
Mm-hmm.
So here we go.
I do have a question. What's the difference between like what is it, like support and resistance and supply and demand? Are they the same thing or are they like different? methods
That's a
or
really good question. So support and resistance is basically a level, right? So let me pull up my chart. That's a really, really good question, and I think I put that in the terms somewhere. So let's say we pull up fucking Shopify. Shopify is a real easy one on the daily. Okay, so I'm just gonna open a new chart here. I don't want to mess my levels up. So we have shop here on the new chart. I'm gonna remove these indicators. Gonna pull it up on the daily chart. So if you look at Shopify here, you can basically take a straight line, right? You go to you see my little crosshair tool. If you were to take a straight line, you see that these points touch, right?
yeah.
That is basically a support. I mean a resistance, because every time price goes up there, it resists. It comes back down, goes back up, resists, comes back down, resists, comes back down, up, resist. And then right here, we resisted it one more time. So that acts as a resistance. You put a line down here, right? Every time price comes down here, it bounces, comes down here, bounces. So support and resistance are basically just a straight line, like one level. But if you were to take a supply and demand like zones, I don't know if that's what you're referring to, zones, like supply and demand zones. Basically, you see this top right here,
Yeah.
this top that pokes out a little bit, but then you see this bottom right here. There's like some sort of support because price obviously bounced here. If we're doing this, like there was something there that made the price go up. It's not just there for no reason. Now, if you were to take a straight line and you connect this top point with this bottom point, like that, it's pretty spot on, right? One could say that it's so this ends up turning into a zone. It pretty much, instead of one line area, one line, it ends up turning it into a whole area. So basically, this ends up becoming a supply zone. So every time price hits here, anywhere in the red box, it's it's not an exact level, it's more of an area. So even down here, if you were to draw a zone or a demand zone, you would draw it from this one because you can see that we obviously had something here, which caused the price to go up. So there's obviously some sort of support there, obviously, right? Because it's not just going to do that for no reason. It needs something holding it there. So if you were to take a straight line again, like I did here, connect just that one because there's really nothing else that connects to it. You can just do it like that. And then that ends up making this whole area a demand zone. So anytime price goes in this rectangle right here, you know that price is gonna go up. So you can see now that instead of touching this line to the exact point, now it's just anytime it hits this green box, it's gonna reverse. So right here we have one touch, we have another touch here, now we have a touch here, touch here, touch here, and same with here. Now we got a rejection here. We bounced off here at one point, broke through here, and then look at these wicks. They're like rejecting the box right there. So it's really no difference. It's just support, support and demand are the same, basically, because you're gonna find support at the bottom, right? Support is your floor, and demand is just an area where there's a bunch of buyers. So and this is a whole area. You see how it's from 30.64 to 31.79. It's literally a whole block. It's not just one line. So that's the only difference. Supply and demand is more of an area, and support and resistance is just a line. So
Okay.
like right here, you could say this is just this is more just support because I can't really make a box out of anything. The only reason why I can make a box out of here is because I can connect these tops right here and fill the space in, basically just kind of grab all these touch points and put them all in the box together. Over here there's really nothing else that I can make out of make a zone out of. Like here I can't even make a zone there. This is just resistance. It goes on resistance because I hit it and it just came down. One could make this a zone though. Now this could act as a zone right here. um let's see. It's the same thing though. It's
Okay.
really the same thing, yeah. So demand is going to be your support, and supply is going to be your resistance, basically. So every time I hit supply here, supply means that basically sellers. So each time price comes up here, there's sellers. Always sellers, just ready to bring that shit back down. Every time price comes back down here, there's buyers. Buyer zone. I just I don't even call them supply and demand zones anymore. I just call them buyer zone, seller zones. That's it. Um, and then you have your basic support and resistance levels like that. Did that help you answer your question, by any chance?
Yeah.
Okay, cool. Yeah. It gets easier though. It gets easier, and I know right now that probably is like confusing a little bit, maybe. Yeah, I did. It took me a while to put together supply and demand and support and resistance. But here we go. I guess we'll go back to the If you want a good one to practice with, just pull up shop too whenever you have time. Pull up shop on the daily and just look at this little area right here. What I like to do is use a little rectangle tool, and I like finding shit like that I can put in a box because these are like some pretty simple setups. You'll wait for a break either out of the box to the upside or out of the box to the downside. Once it breaks the strong daily support, and we're gonna shit for a minute. If we break this daily resistance, we're gonna fly for a minute. So this is a really good setup, especially if you just want to practice marking your lines or trying to find zones. So we'll go back to the technical analysis thing. Where were we at? Okay, this slide. Trying to get to it without it fucking. There it is. Without having to restart. So technical analysts use chart patterns and trends, support and resistance levels, and price and volume behavior to identify trading opportunities with positive expectancy. Technical analysis does not consider the underlying business or the economics that affect the value of a company. So here's a quick difference. Fundamental analysis, I look at company analysis, industry analysis, economic conditions, and future profit outlook. Technical analysis, we look at moving averages. Not sure if you're familiar with those, but they're just like squiggly lines on the chart that kind of just help us gauge where the market's going to bounce. Are you familiar with moving averages?
No, not really. I
Cool.
know
I'll
what it
just call
is,
them,
but I don't know how to like.
okay, I'll call them squiggly lines for now, just because
Okay.
that's what they look like. So we got these moving averages, we have charts, and then we have indicators and oscillators that help us gauge momentum, and pretty much direction on where the stock might be going. So there's a more in-depth difference on it. Fundamental analysis is more suitable for investing. Technical analysis is more suitable for trading purposes. So just know that as day traders, and a lot of people will, get these terms mixed up or whatever, but we are not investors. We are day traders. So if you're more looking to invest something, investing is more like holding something for a while and letting it appreciate in price or go up in price. So you would use fundamental analysis basically for more long-term holding or
Mhm.
long-term trading. Then technical analysis is more for just like trading, day trading, finding an entry and an exit point. There we go. Fundamental analysis used by long-term investors who look at the intrinsic value of an asset. Technical analysis is mainly used by traders interested in short-term price movements. So basically, us or future you.
Mhm.
um, Objective. So fundamental analysis, they use it for finding out whether a asset is overpriced or underpriced. Technical analysis uses it mainly for finding the right time to enter and exiting the market. And you can use fundamental analysis and technical analysis together. Fundamental analysts will use technical analysis to find their entry points and exit points because you can't really find an entry and an exit just based off numbers, like somebody's financial statements. Um, so fundamental analysis can be applied mainly to stocks, but also works on bonds and derivatives. Technical analysis can be applied to all assets. So it doesn't matter whether you're trading forex, futures, stocks, um, what else? I don't know. Whatever else uses fucking charts. You can use technical analysis. For fundamental analysis, decision making is based on financial statements, press release, balance sheet, and so on. For technical analysts, decisions are made based off trade volume and price. Fundamental analysis says long period, years or decades. I guess that's what you're holding for. You're analyzing that information to be holding for years or decades. Like I said, long-term investing. If you're looking into a retirement account, then fundamental analysis would be good to do. Technical analysis, it's more shorter. It's days, hours, minutes, seconds. Um, then the history on it. I guess fundamental analysis was somewhere around 1934, and technical analysis began in the 18th century. Um, Long ass time ago, back in the 1700s. Just
Mhm.
crazy. Yeah, did you know that the first technical analyst was a rice trader from Japan?
Is it that guy? I I read a book or like I heard an audio book. The what is it? The Bible of
A
Candlesticks, I think
candlestick
it's called.
Bible, yeah, yeah.
Yeah.
So it's that guy, yeah. So he pretty much created. That's why it's called the Japanese candlestick because
Mhm.
they use it for rice trading, and he figured out a way to pretty much gauge the market of rice, like using the psychology. Basically, what I said earlier, when you use technical analysis, you're pretty much using previous like history, psychology, etc. of like the masses of people. You're figuring out where everybody's selling, where everybody's buying. So he was able to create the candlestick chart, Japanese candlestick, and use that I guess to his advantage to become the greatest rice trader in history or during his times.
Mhm.
So I think that's pretty cool. This dates back all the way that far back. It's like 300 years, maybe 200 some years. So here we go. We're done with the differences. If you need to take a picture of those, you can screenshot it.
No, I did. Mhm.
All right, cool. We'll move on to the next one. So choosing your broker. All right, cool. We're now down to the brokers. Have you figured out which broker you wanted to go with, Rina? You there?
Hello?
Hey, can you hear me?
Yeah, my bad. Something happened.
Oh no, you're good. I just wondered. I didn't know if we got cut off or what happened.
Yeah, I sort of did.
All right, cool. So you still able to see my slide?
Yes.
All right, cool. So choosing your broker. Did you figure out which broker you wanted to go with by any chance?
I don't know, maybe Weeble or Thinkorswim.
Perfect. Yeah, those are two great options, and I'll explain why in a minute. So here we go. Choosing your broker. We have Robinhood, which everybody knows of. This was probably everybody's first broker. I know it was my first broker. Um, we have Webull. We have Thinkorswim by TD Ameritrade, which is TD Ameritrade is the broker, Thinkorswim is the platform. Um, but I consider them to be both the same shit. Interactive Brokers is the broker, and then they have a trading platform called I forgot what it's called, Trade Workstation or something like that. So these are the four that I recommend. Of course, there's more. You have Merrill Edge, you have Charles Schwab, you have E Trade. Not all the ones. These are the four that I'm familiar with that I've used in the past, and I'll show you which ones I recommend and why. And here we go. So choosing a broker. All right, so right here we're going to be comparing Robinhood, Webull, TD Ameritrade, and Interactive Brokers. On the left side, we have the commissions. We have, whether they offer charting or not, whether they're mobile friendly, their market data, because believe it or not, some of these brokers you have to pay for market data or else you're going to have delayed data. And you can't trade off delayed data. And you can, but your numbers are going to be off like by a lot.
Mm-hmm.
You'll probably lose. So we're also going to be wondering if they offer cash account or customer support. So to start off with Robinhood, their commissions is $0, which is really good, because that's more money that you have to spend less of or whatever. Less money you got to spend, and commissions do add up. Webull, same as oh, sorry about that. Same as Robinhood, offers $0 commission. So that means that each trade you take, it costs you $0 to get in the trade. I don't know if you're familiar with commission overall, but are you familiar with it? Like, do you know that these brokers do charge you for every trade you place?
No, I didn't know that.
Okay, so Robinhood and Webull, they're like very, very new investor friendly, very mobile friendly apps. I guess they offer zero commissions. Really don't know how they do it, but um, so other brokers will charge you a fee pretty much to place a trade to buy,
Mm-hmm.
like put a buy order, and then they'll charge you again when you want to sell that position. So like TD Ameritrade over here and Interactive Brokers, they charge you 65 cents when you're buying and they charge you 65 cents when you're selling. So one thing to always keep in mind is before you open up a trade, just know you're gonna owe the house $1.30 regardless. Like whether you win or lose, they're gonna take their $1.30 right off the bat.
Okay.
So that's one thing to look into. If commissions is huge for you, you can always stick to one of the ones that offer zero commissions, but really $1.30 round trip isn't bad. And what I mean by round trip is buying and selling. So you're gonna be forced to sell your position at some point, so there's really no escaping the
Mm-hmm.
round trip. You can't just pay 65 cents, buy it, and just keep on holding it. I mean, you can if you're long-term trading, but eventually, when it's time to sell, you're gonna pay that 65 cents to sell it. So that's the thing with TD Ameritrade and Interactive Brokers. They charge commissions, but the reason why some brokers charge commissions is because they offer you a lot more tools. They offer you better data. Not all market data is the same. Um, so this is why TD Ameritrade and Interactive Brokers charges. They have a lot of tools, and it's really not much. Okay. So now once you figure out what you're trying to pay in commissions, if you're trying to pay anything, or not anything at all, then you have some options to weigh here. As far as charting, Robinhood does not offer charting. I mean, I guess they do have the little candlestick chart and the line chart, but it doesn't offer you a lot of data. So it's not a full blown chart where you can actually like do technical analysis on it. They don't have drawing tools. It's just a basic quick glimpse of the price action.
How it's moving.
Yeah, pretty much. So it's like you can't even really predict anything using a Robinhood chart. Now, Webull, amazing. I love their platform on mobile. They have very advanced charting features. A lot of tools on there too. They have like little comment sections on each ticker. That way, you know, you can keep up with the other, like trading community or whatever and see what everybody else is saying. Most of the time, it's a bunch of just like noob traders just talking shit, don't know what they're doing on there. It's pretty funny to watch sometimes, but um, Webull I highly recommend over Robinhood, and there's a lot of reasons why I would recommend Webull if you're gonna go with something with zero commission. And then one big thing is definitely the charting. So if technical analysis is something that's really gonna be big for you, then definitely want to be on a broker that offers both a charting platform and being able to place your orders there at the same time. That's with TD Ameritrade and Interactive Brokers as well. They do offer charting, so that's why I love TD Ameritrade because I can chart and place my trades in the same platform. If I feel like it, you know, I kind of switched my charting platform over to TradingView now. So, but it's still good. I still use their charts sometimes. TD Ameritrade's charts. Interactive Brokers, they are they have charts as well. Their charts, on the other hand, are a little their whole design on their application is a little outdated though. It's not very user friendly. It's like kind of hard to use. So Interactive Brokers does offer charting, but it's just a little weird. Um, so Robinhood, mobile friendly. Um, you know, very easy to navigate certain things. Webull is friendly as fuck too. TD Ameritrade is friendly if you're just placing orders, but for charting, it's not the friendliest. Um, Charting, you'll probably like miss your entry by the time you're finished charting something. Your move's already gonna happen. So I wouldn't recommend charting on Thinkorswim mobile. Interactive Brokers, it is not mobile friendly at all. Whether for charting or whether for placing your orders, it is not great at all. So I would avoid Interactive Brokers on mobile. Um, Market data on Robinhood's free. Webull, you get free stock data, but you have to pay $2 a month for real-time options data, which is not that big of a deal breaker. It's I mean, $2 a month versus paying $1.30 for every trade you're taking. That's I'll take it.
Mm.
So with with Webull, you get this thing called active trader or a big button. Basically, it's not like I wouldn't be able to really explain the difference until I put two brokers side by side. But with the big button, you can basically buy and sell options with one click of a button. You just hit a buy button and a sell button. So that's why I like Webull. With Robinhood, you have to go and find the date. You have to go find the strike. You have to fill in your price. And then if you don't get filled, you have to go down to your messages, go back, and then re-edit your message or re-edit your order info, and it just takes too long to get filled on Robinhood. So that's why a lot of people talk shit on Robinhood. You will lose money on Robinhood, especially if you're scalping. Um, So Webull is good, even though they charge $2 for the option real time data. It's completely worth it. Um, TD Ameritrade, they offer free market data on stocks and options as long as your account has, I believe, $500 in it. So you need to fund your account with a minimum of $500 in order to get live market data, or else they're gonna put you on delayed data, which is like 15 minutes delayed.
Okay.
Um, just still not bad. I mean, I think once you just deposit 500, you don't need to keep the full 500 in there the whole time. You can withdraw it. I think as long as you just make an initial deposit of 500, they will give you the free market data. Interactive brokers, they charge you for all the data, $3 a month for real-time options data, $3 a month for stock data. It's just it's a pretty shit platform, but they do have really one cool option that I like, or feature, and I'll go over that in a minute. Robinhood, they now just started allowing cash accounts. It used to be just straight margin accounts, so that's why everybody would be like, "Fuck Robinhood, I can only do 3-day trades a week." But now they have a cash account option, so yes, there's a cash account, which is good if you want an unlimited day trade, but still, I would avoid it for scalping. If you want to just day trade or swing trade on Robinhood, that's perfectly fine. Webull, they offer cash account as well. TD Ameritrade, yes, they do offer cash account. Interactive Brokers as well, cash account. Robinhood, they have a slow customer support. Webull is pretty good. They have a support in their app, so you can just go to their support in their app, message the agent, and they'll message you in a few minutes. TD Ameritrade is very great as well. They have a really quick support button on their platform, so you can just click support and message someone on the chat, and they'll help you. TD Ameritrade has helped me a lot with any little thing, even like times where it's not even me, where order just got fucked up and I lost some money. They will go back and fix it for you. And if they're able to see that their end was messed up, they'll go and fix it, put your money back in your account. And you can also negotiate these commission prices with TD Ameritrade as well. So they're really good with customer support. I talked them down. I think I started at 65 cents. I talked them down to 60 cents. You know, whether I was buying or selling. So now for round trip, I pay 10 cents less than somebody who just opened up an account. But they also look at how much you trade. If you trade a lot, this commission adds up a lot. So that's where you just talk them down. You're just like, yo, can you just knock me down a few cents or so?
Okay.
And they should do it depending on how much you trade. And then interactive brokers, they're very slow with customer support. If you email them, you probably won't hear from them for a few days. So there's that. Here's some notes to add with Robinhood. Very user friendly, but you get slow and shitty fills. Um, so are you familiar with what a fill is?
No, not really.
So basically, a fill is the price you're trying to get in at, right? It's like if you want to get in filled at like, all right, so let's say that a contract's trading between $100 to $105 or whatever. You're trying to get filled anywhere in between there. With Robinhood, by the time you hit buy, you probably get filled at like you probably paid 110 or $115 instead of 100 and between 100 and 105 where you were actually trying to fill in at. Or
Okay.
or it might just move so fast like the orders will not go through quick to the point where the price already had moved up and just went without you, so they're not gonna fill your order. So they have very slow shitty fills, which is why I was saying that for scalping it's not ideal because when you want to scalp you want to be in and out like seconds matter, a few seconds matter, and if you don't get filled instantly, then let's say you're trying to buy at a certain price, you don't get filled instantly, that price could already be up a lot. So by the time you get filled or or whatever the case is, you might not even get filled. Price is going to be already gone. Just because that broker is really shitty at filling or whatever. Same with selling. Same on the sell side. Let's say you're up a good amount of money or whatever. You're up $100 on a contract, and you're trying to sell it at $100 profit. But let's say by the time you send out your order or whatever, Robinhood may not even fill you. So now that $100 probably only about $70 worth of profit, and it'll like sell you out there, so you won't be able to collect your full amount of money. It'll give you some pretty trash fills. Um, and we'll talk more about fills later. Could be confusing right now. So Robinhood has slow, shitty fills. Um, and fills is basically just the price you're trying to get filled in at, the price you're trying to get in at, or the price you're trying to get out of at, your ideal price. Um, So Robinhood is best for long-term investing or swinging. Not easy to navigate when wanting to replace an order. So this is the biggest thing is when you're trying to replace an order. Let's say you don't get filled, and it's like your order did not get filled, but then you're still trying to get into that position, so you're willing to pay a little more extra. So with Robinhood, you have to go back and re-edit. Like you have to go in your messages, click this link, and then edit your pricing, and a few dollars up or whatever, stating that you want to pay a few dollars more to enter that position. And then by the time you do that, then price could already have rised again, and then it might tell you didn't get filled again. So then you have to go back and do that, and now you're just chasing. You're just overpaying. So it's not as easy to navigate when wanting to replace an order with let's say TD Ameritrade. If I don't get filled with my one-click button, I just click it again. I could just click my buy button again, and it'll fill me like really fast. So here's an example. I will open up Thinkorswim here, and this is what I mean. You know what? I probably won't be able to show you since the market's closed. I'll just go on paper trade. You still here by any chance? You can still hear me and
Yeah,
stuff,
I'm
right?
here.
All right,
Yeah, I'm
cool,
here.
cool. All right. So this is simulated trading. So basically with Thinkorswim, this is what I mean. You have the active trader, and I think I went over. No, I didn't go over this with you. I went over this with somebody else. So basically, let's say this is a contract, right? An AMD contract or whatever. I can pretty much hit buy or sell market here. I think since the market's closed. No, this is an old contract. That's why. Let me see. We do this one, 72. Okay, so right here, it's basically so. All right, so if you look at these contracts, they're at 209, right?
Mm-hmm.
They're at $209 a piece. So I don't know if you're familiar with the way the format is for option contract, the pricing is. But when you see like 2.09, you just times it by 100. So it's $209. Does that make sense?
Yeah.
Okay, so when you see something that's worth $2, it's really worth $200. So let's say with Robinhood, I'd have to show you on my phone if I can screen record. Let me see if I can like zoom on my phone. I think I can. So all right, so with Thinkorswim, what I can do is this. Look, I can buy market. Boom. Um, it didn't fill me there. I'll do futures just because futures is still open. All right, so with futures, I can or with TD Ameritrade, I can buy market. Let's say buy market, and I get filled instantly just by hitting one button, basically, and I can sell instantly by hitting one button. So that's one reason why I prefer PC trading because you don't have to go back to certain screens. You don't have to keep flipping screens to find out how to replace your order. You can literally just buy market, sell market. And then you have this active trader here, which, shows you how much money you're making as it's going up this ladder. So this is the entry. This is your fill price. Basically, I got filled at, let's see right here, 3955. That is my fill. So your fill is the price that you entered in. So anything under my fill is going to be red, right? It's going to put me negative. So I'll be down $12 if I go down 25 cents. I'll be down $25 if I go down 50 cents. And as I'm going up, my profit's going up. So right now I'm up $12.50, as you can see right here on this ladder. With this active trader, you can set a stop loss as well, like that. So if price was to, let's say, fall under and hit negative $37.50, it'll just stop me out automatically. Um, but basically your fill price is this. I got filled here. Now if I want to get filled here for a sell, Now I have a limit order there at 395525. If price goes back up there, it should automatically sell me out and fill me in at that price. Um, I can't really show you what a rejected order looks like right now. I think it has to be when market's open. But basically, a rejected order is like, let's say you buy like, I'm gonna just try to buy a crop load. You see how it says rejected up here on the corner? Normally, if you don't get filled, it'll tell you that your order has been rejected or that your order's still working, or you'll see it just floating. Like you'll just see right here, look. Let's say I want to get in here. I'll put a limit here. I'm trying to get filled at 3954.75. And if it never goes there, what I can do is cancel my order. You know, I can just hit this X or whatever, and then move to the next one up and pay $1 extra to get filled. Versus if you were on Robinhood, what you would have to do is you put your limit, you would have to cancel your order. Here, I'll try to show you on my phone real quick. Um, Let me see. 3, 2. Yeah, man, I'm gonna try to pull it up on my phone so I can show you the difference between a good broker and a bad broker.
Okay.
Recording in progress.
Alright, cool. So I'm on my phone. Let me see if I can flip it. It's not making like a weird noise for you, is it?
No.
Alright, cool. There's only I can host share. Let's see if I can